Good morning, all. Welcome to the SBI Securities Daily Market Podcast. Here we will be discussing views on Nifty and Bank Nifty, derivative data positioning, as well as FII positioning. We will also discuss a bit on the USDINR pair and its probable move for the day, as well as the coming few sessions. In the week gone by, last week we had seen indices witness selling pressure from higher levels. They did close at the lower end of the range around 19,260. But what's more important than that is that the pace of the fall in the last 5 weeks is very slow, because the major action is visible in the mid cap as well as the small cap indices in comparison to the broad based indices. So we feel that today's session as well as tomorrow's session would be extremely crucial from the price action volume perspective. So coming to Nifty, for the coming week, 19,440 levels would be very crucial, as 20-day exponential moving average is placed there, and it's important that this level crosses for any reversal pattern to materialize. On the downside, supports would be at 19,150 or around 19,200 zone. So 19,150, 19,200 zone would be very crucial to watch out, as there is a pending gap on the weekly charts at that zone. And importantly, significant open interest formation is also visible in 19,200 puts. So if you adjust the premium in 19,200 puts, the support comes out around 19,150, 19,170 level. So we feel that this 19,150, 19,200 zone for the day as well as for the next couple of days would be very crucial. And in case this holds, there could be a pullback up to 19,400 once again. But even for playing this pullback, we will not recommend aggressive bullish positioning, because till the time this 20-day exponential moving average of 19,440, 19,450 is not crossed, we feel that once again index could consolidate with a negative bias. So 19,150 to 19,450 could be the range for the initial few sessions, as well as if 19,150 is breached, then the extension of the profit booking could be at a faster pace, and we could slide to lower levels below 19,000, 18,950 kind of levels. Overall, looking at the option chain, significant call writing is visible in 19,300 and 19,400 calls, while put writing is visible in 19,200 as well as 19,000 strikes. Coming to Bank Nifty, in the past week moved higher up to 44,900. It also broke the 4 successive weekly lower top lower bottom formations, but post that it saw profit booking from higher levels on Thursday, which even continued on Friday. So, however, if you compare now, if we have to compare both the indices, Bank Nifty and Nifty, the structure in Bank Nifty is much better than Nifty, because Bank Nifty has had a higher weekly close compared to the previous week, while Nifty had a lower weekly close when you compare it to the previous week's Nifty close. So keeping the overall structure in mind, we feel 43,850 kind of levels, 43,850 to 44,000 zone will act as an important support, because it's a 100 DMA, and secondly 44,000 put strikes are having maximum open interest at that zone. So overall 43,850 to 44,000 would be the support. Now where will the resistance come? Resistance on the upside will be witnessed around 44,500, 44,600 zone, where there is a confluence of the 50 as well as the 20-day exponential moving average, and 44,500 calls are having highest open interest. So overall range for Bank Nifty for the coming week would be 43,850 on the downside to 44,600 on the upside. This is also concurrent with the options data, where we are seeing highest call writing in 44,500 strikes, while highest put writing is visible in 44,000 strikes. So even the data as per the technical indicators and the charts and the options data are matching, and overall range works out to be around 43,850 on the downside and 44,600 on the upside. Let us now understand what the FIIs have done on Friday. And I always believe and I've always communicated that FII actions will always give you a cue for the next few days momentum in the market. So if we see if we see FIIs data on Friday, they have been net sellers in cash to the tune of 4600 crores roughly, while DIIs have been net buyers to the tune of 1400 crores, around 1414 crores to be precise. If you look at the open interest data of the market participants, FII's long short ratio for index futures has once again dipped to a number closer to 40%. Now this was around 43-44% on Wednesday and Thursday. So what I feel is that again the ratio is weakening. Again the FIIs have kind of booked their long positions, and it's tilting towards the shorter side. Apart from being sellers in index futures, FIIs yesterday have gone aggressively short in index calls. So they have sold calls and they've also bought index puts. So if we look at this overall data positioning in the last few sessions, it is weaker, and hence going into the expiry week, I feel one should be a bit cautious with respect to over leveraged positions. So here there is a caution with respect to the over leveraged positions. For the week gone by, in the last week where there was some decent action visible, and where we feel that there could be continuation of the action in the next coming week also, that is private banks that have been relatively stronger. Even the IT stocks have held out, and they have closed with gains for the week, and media sector. So all these three receive a thumbs up from our side. And there was underperformance kind of visible in auto stocks, FMCG, metal, oil and gas. So all these four sectors, they had displayed underperformance, and especially metal. Now it's important to speak about metal, because when you see dollar index trading around 104 levels, which is quite elevated, one needs to be really cautious with respect to over leveraged positions in metals. So guys, please be a bit cautious when you are trading with leverage in case of metal stocks. Coming to currency front, despite the strong close of the US dollar in the last week and continuous strength in the US dollar in the last entire week, we have seen USD-INR once again appreciate, breach beneath 82.50 and close around 82.30-40 kind of levels, and so they've closed with around more than 0.5% gains for the week. This decline has led the pair to drop below the previous breakout zone around 82.70, and it's now back in that consolidation zone of 81.80 and 83 kind of levels. So going forward for the day, we feel 82.25, 82.30 will act as an immediate support, and in case we breach below that level of 82.25, then there could be a further correction up to 81.70. So 82.25, very important support. Now on the upside, the resistance which was earlier around 83.30, 83.40 has now shifted lower to 82.90 and 83 levels. So 82.25 on the downside and 83 on the upside will be a boundary for the USD-INR pair, and above 83 levels it could once again resume its up move up to 83.40, 83.60 levels. So that's quite important for us to follow, because USD-INR is continuously in the last 3 days appreciating, while dollar is getting more stronger. So next couple of days would be very crucial for the currency markets also, and we need to closely follow that. So that's all for the today's episode of SBI Securities Daily Market Dose. We hope you really enjoyed listening to the podcast and found it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Until then, happy trading, stay safe. Thank you all for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.